So now let's talk about directional market trends. And what you need to concern yourself with are known external factors. One big one would be Fed meetings. So as you're putting on your wager in the options market, you need to be aware of when a Fed meeting happens. That's important because depending on what the Fed says, if there's any unexpected information that comes out, it could have a big effect on what the overall market's going to do and then have an overall effect on what your stock is going to do. Also, depending on what sector you're in, if it's an energy company, you need to realize that there are oil inventory numbers that come out, right? And so depending on what comes out of that inventory number, whether it's bullish or bearish, it's probably going to have an effect on the whole energy sector and conversely on the stock that you're trading in. So as we talk about finding opportunity, one theme that I continue to say throughout this course is stack the odds in your favor. That is very key. You need to have a thoughtful reason to establish a position. Take a holistic approach. Put all the pieces together before you start your trade. Also, the underlying theme of your portfolio is very important. So if it's a bullish theme that your portfolio has, you got to be asking yourself, does the trade that I want to put on, is it helping or is it harming this portfolio? So then you got to ask yourself about risk. Now, is the risk that you're taking, is it increasing risk or is it reducing risk as it relates to your portfolio? All of this has to be taken into consideration. Also, you want to establish good risk-reward setups. You need to make sure that the odds and the probability is on your side over the long term, because that's going to have a big effect on how profitable your trades might be. And then also, trade in liquid markets. It's key. You need to look for stocks that trade a minimum of 1 million shares a day, and I like to be 3 to 5 million at least, because that's only going to make the bids and asks tighter and make more opportunity for you when you're trading options. So again, use fear to your advantage because volatility could cause higher options prices. So if you're looking to sell options, you're going to want that volatility to be a little amplified because you can extract more premium as it's working in your favor. Also, patience is key. This isn't day trading. You want to wait for everything to line up and then you want to swing. You want to wait for that slow, perfect pitch. So let's conclude. What did we learn in this section? You want to judge the health of a stock and company through analyzing fundamental data and earnings reports. You want to determine the impact liquidity has on options when putting a trade together. You want to assess the climate of the stock based on trend and volatility. And then lastly, you want to utilize a thoughtful approach to finding opportunity to your trading. So the bottom line here is take a holistic overview before you do your trades, and then the likelihood of success is much higher.